All right, welcome to today's show, or tonight's show, I should say. I'm going to get into signals that we should look for a potential rally to continue, or are we headed towards more of a bear market? So we're going to jump into that today. I'm going to let you make your own decision on it. Secondly, I'm going to talk about BMNR and the power of buying when it's low. So I'm going to share with you some financial examples of if I bought BMNR at $33 or $34 versus buying it at $60, and also why I trade on a daily basis to pick up shares at the bottom. And then third, we're going to get into a little bit about how the Fed operates, to explain the Fed and explain how liquidity gets pumped into the system. And I'm going to go over the 7 signals to see, are we headed towards more of a rally where this is just a reset? Could we go to a bear possibly? What are the chances of that? And then give you some data so you can make your own decisions. All right. Not tax advice, not financial advice, not legal advice. Do your own research on everything. If you do want to get access to my book, Money Game, you can snag it down below. And it actually goes through my trading strategy. I give you a free video with it to walk you through my trading strategy of how I pick up shares at the bottom of the market. And also specifically what I am doing right now is I am also waiting to see, are we going to drop lower? I have transferred money to my investment account. Not only do I trade to pick up more shares, but when BMNR drops lower, I have a plan to pick up more shares as well. So we're going to get into all that tonight and more. And I fully understand how you must be feeling right now, what's going on in the market. It sucks. Nobody likes to see it. Nobody expected this. We all thought this was going to be a blow off top coming in December, or at least going into 2026. And I haven't lost hope on what's happening, but I want to look at all scenarios of what's possible and what to prepare for. All right. So here's what I'm showing you right now. I want to walk you through just how I look at this from an investment standpoint. I still believe that BMNR is a great asset. I'm going to continue to invest in this asset. I'm continuing to hold this asset. And if it drops further, I will put new capital and cash flow into this asset. But regardless of what happens, I will continue to trade it every single day, Monday through Friday, to pick up more shares. All right. Here's why I believe in the power of picking up shares at a low cost. And I'm going to show you why this is so powerful. All right. So if you look at BMNR, and you looked at an investment you were to make into BMNR at $100,000. It says $100,000 to the left, to the right. If you were to buy it at $60 versus a $33 price point, mind you, it's real that we could drop lower on BMNR. We could go below $30. So I'm looking at this and picking up BMNR at a $33 price point versus buying it at $60. So what's the power of buying things when they're low? Let's look at that right now. Okay. So scenario A, if you buy BMNR at $60 and you invested $100,000 in BMNR at a $60 price point, you would buy 1,666 shares. And then that same $100,000 investment that I'm highlighting up here, if BMNR were to go from $60 at the time you bought it to $120, then your $100,000 investment would go to $200,000. So buying when the market is up is clearly not as powerful as buying when the market is down. So you put 100 grand into BMNR, one day it hits, $120 from a $60 price point, and you take a profit of $100,000, and your ROI is 100%. Okay. So that's what BMNR looks like in terms of buying it at a $60 price point. Now, if you take a look, if BMNR were to only hit $90 at some point in the future, I'm not saying this is happening anytime soon, especially with the bearish sentiment, the value would be $150,000 for BMNR, with a $100,000 investment that you put in, and your profit would be $50,000. So that's what it looks like for somebody who invested like 100 grand into BMR or $10,000 in BMNR at $60. It goes up to 90 and you're making a 50% profit. So you make 50%. If it's 100 grand, you make $50,000. All right. So your ROI would be 50%. Now, if you look at scenario B, and I think a lot of times people don't look at the math on this to understand when you buy low, it's like extremely powerful to buy low. Now, I'm not saying we're not going to go lower. Again, this isn't tax advice or financial advice or legal advice. Do your own research. But what I am saying is when you buy something at a much lower price point, then the shares that you get are drastically have a drastically higher impact to your portfolio when the portfolio goes back up. All right. So in this previous scenario, buying at $60, your shares were like $1,600. If you buy BMNR at $33 with $100,000 investment, the shares would be $3,030. Now, here's where it gets really interesting. Pay close attention on this one because it's really fascinating to see. And then I'll stack it side by side. If you're just joining us, I'm showing you what an investment in BMNR looks like at $33 versus $60 and the power of buying at the bottom. Now, that same $100,000 investment in BMNR at $33 would grow, $100,000 investment would grow to $363,000. So I'm going to go through the 7 signals in a little bit of, what's looking like a bearish scenario for us, what's looking like a bullish scenario for us, what's looking like us just chugging along. But the point is, at some point in the future, I believe BMNR will go up to $120. It might be in 2026. We might have to wait several years. But at some point, if I were to buy $100,000 worth of BMNR at $33 and it goes to 120, the value of my account is $363,000. The profit would be $263,000 and the ROI is 263%. So if BMNR hits $90, then that same $100,000 goes to $272,000 for a profit of $172,000. Okay. So that's an ROI of 173%. Now, if we stack it side by side and you take a look at this, this is just what I've been going over. This is like a really powerful scenario to look at what buying at the bottom looks like. For me, I strongly believe in this stock. It does not mean that it can't go down to the 20s or lower. But as you know, I'm trading the stock every day and I'm picking up more shares. I just told my my CFO to transfer more money Monday morning into my investment account. Typically, I'm not putting new capital into the stock, but right now I'm transferring some money to look if BMNR drops even lower. I'll put some new capital and I'll continue to actually trade it. Okay, so this is just a really cool scenario. If you're just joining us, check this out because this is the thing that most people don't do the math on. And when you really look at buying lower or picking up shares lower through trading, this shows you the power of it, okay? So the scenario we ran was if you were to buy BMNR at $60 price point, all right, you'd get this many shares, 1666, all right? And this scenario shows that you put 100 grand into it, okay? Now, if you buy BMNR at $33, okay, $33 here, you get 3,000 shares. Look at how many more shares you get. So if you get BMNR going up to $120, if you put $100,000 in at $60 price point, your account's 200 grand. If you put $100,000 in at a $33 price point, your account is 363,000. That's a significant difference. You're looking at 100% versus 263%. And if you were doing the value at $90, it's even kind of more interesting at $90 because like when you look at $100,000 into BMNR at $60 price point and the value of the stock goes to $90, that means that you would have $150,000. See, the stock only goes up 50%. $60 to $90 is only 50%, but $33 all the way up to $90 with BMNR is a 173% gain, which is huge. So that means that you're looking at a $272,000 value versus $150,000 value. So buying low, it looks like, if you look at this scenario, it looks like I'm buying low. Oh, wow. Like I bought BMNR at $60. Now, if I buy at $33, I'm only going to get double the gain when it goes up. But when you look at this, a 50% increase from $60 to 90, $60 to 90 is a 50% ROI. $33 to 90 gives you 173% ROI. And that's the power of being able to buy at the bottom. So when you hear people say, buy the dip, buy the dip, buy the dip, this is an example of when one buys the dip. Now, timing the market can always be difficult. So when you look at it, could we go lower with BMNR? Yeah. If you look at the market right now with where we're at with Bitcoin's now dropped to $93,000 today. It's now at 94,173. Ethereum's at 3,088 right now. So could we open up? Could Bitcoin go into the 80s? I think at some point this week, Bitcoin might drop into the 80s. So we could go lower, which means BMNR could go lower. So again, I'm getting some dry powder ready. I'm sending it to my investment account. I'm going to watch to see how much lower BMNR drops. If it drops lower, I'll deploy fresh powder. If not, I'll continue to just trade it, because when I trade it, I pick up shares at a lower price point. And yeah, when you look at holding the stock, like I hold BMNR and I'm holding it through the downturns, like maybe you are. But like, let's say my portfolio drops with BMNR by 40%. Well, my portfolio gets 40% less, but I'm trading and picking up shares at the bottom. So even though I'm trading with a lower portfolio, when I pick up shares at the bottom, look at how much more valuable shares are at the bottom of the market than picking them up at the top of the market. And that's the whole game for this, right? So I'm going to show you guys some signals. Somebody's asking about possible bear market. I'm looking to show you signals of what to watch for, and take a look at determining whether we're nearing or heading to a bear market. Are we going to rally into 2026, or are we going to have a bullish scenario where we boost up from here on a bigger rally? So I'm going to look at 3 scenarios with you, but we need to look at all 3 to be prudent, and see where we're going to go. Okay. And I'm going to let you decide, but there's very specific signals to look at, things that need to happen for us to continue to rally on. Okay. And I'm going to go through those with you in a little bit, but I wanted to show you BMNR and really the power of holding an asset and the power of picking up this asset as it goes lower. I mean, look at this. If you pick up shares at $33 versus buying shares at $60, and BMNR goes to $90, you're looking at a huge difference in ROI. If I bought it at 60, I get a 50% ROI. If I buy it at 33 and it goes to 90, I get 173% ROI. So that's how, you could look at it and say, are institutions right now like really tanking the market so they can pick up shares at a lower cost? I have no doubt that they are, because they want to pick up Bitcoin at a lower price point. If they can pick up Bitcoin at a 30% lower price point with billions and billions and billions of dollars, there has to be some manipulation going on. Okay. So this is another interesting thing to look at here. If you take a look at, if BMNR is $33, right? So to match the $60 buyer's results, right? So somebody who buys at 60 versus somebody who buys at $33. If I put $100,000 in at $60, to match those results at $33, I would only have to put $55,000 in. So one could put in less capital at the bottom too. So it's like, okay, well, maybe I put in a bunch of my money into BMNR when it was at 60. Now it's at 33. I don't have as much capital to put in. So I can put in $55,000 versus $100,000 at a $33 price point, and it's comparable, right? It's comparable to putting $100,000 in at $60 price point, right? So the $60 buyer needs $100,000 to hit the same numbers, and the $33 buyer needs only $55,000, which is pretty wild to show you how buying at the bottom, or buying at a lower price point, because we don't know if this is the bottom, is very, very, very good for the long run. Again, I believe in the stock. I'm going to go over some major, just cool news on just what's happening on the Ethereum blockchain, and why I'm holding BMNR long term. Okay, so if we do rally, then I'm super happy. If we continue to trend down, then I'm going to trade and pick up shares at the bottom. Maybe we chug along and we don't have a major rally, but we chug along into 2026 and Bitcoin regains and starts going up a little bit. Okay. So we'll see what happens on that. So that's the kind of the idea of BMNR. Now I'm going to show you something here, that's interesting with the Fed, because I think it's interesting just to understand this. Now, if you're just joining us, I talked about buying shares at the bottom of the market, and I give an example of BMNR. The power of buying at the bottom or buying when shares are lower is incredibly powerful when it compounds and it torques back up. If you want access to my money game book, you can get it down below, and my trading strategy to show you how I'm buying at the bottom of the market. And I wanted to give you math to show you what that compounds at, but you can go grab the video down below. You can grab the book down below. It's all free down below for you. Okay. So let's get into this version of really what's going on with the Fed, okay, and how the Fed works. And this is just like straight talk, no jargon of how you hear about things on the news or you hear about things when the Fed comes on, and it sounds like they're speaking another language. And so what I'm about to share with the 7 signals that are coming up is relevant to what I'm sharing about the Fed, because if you don't understand how the Fed works, then you won't really understand how much the system is manipulated. And I think one who has knowledge has more control and has more confidence. So I'm going to go through this in about 4 minutes. I think you're going to find it's interesting. Yes, somebody says $30 is looking like a good level to accumulate on BMNR. I agree with that. Not financial advice, but I totally agree with that. Okay. And by the way, I am putting money into my account, new fresh powder as it drops. My goal is to continue to pick up more over the weeks, because I don't think we've seen the low on BMNR yet. So to kind of DCA, put some, if it hits a certain price target, I'll put some in. If it hits another one, I'll put some in. If it hits another one, I'll put some in. I'm going to do that over the next several weeks, because I don't think we're getting out of this situation in the next couple of weeks right now. Okay. So with that, the US government needs money, right? So here's what happens. Here's basically how the Fed works, and then I'll give you the 7 signals to determine whether we're going to rally from here or whether we might go more bearish. Okay. So the US government needs money, right? This is how they get money. The government spends more than it earns. We know this. So what do? They ask for a loan. So they dress it up as, treasury bonds, but it's a loan. So I don't like to use, like, if somebody were to explain the financial system and say how it really works, I think the world would fall over and faint, because if you use the language of what it really happens, this is what it is. The government gets loans. That's how they get money. Okay. It's not complicated, just a loan. It's the same as you borrowing money. People and banks loan the government money. Americans, banks, retirement funds, and other countries all hand over money. Like China loans the US money with treasury bonds. Okay. So the Fed prints brand new money out of thin air. Okay. This is the part they never explain publicly. The Fed literally creates new dollars with a computer. Brand new money, not taxed, not earned, not saved, printed. So the Fed buys the government's loans from the banks. So if you look up here in step number 2, okay, when the government needs a loan is like, hey, I need some loan, I need some money. People and the banks loan the government money. So I want you to pay particular attention to the banks loaning government money. All right. Yeah, I know we all want to get into, are we bullish, bearish? Like, what are the possible scenarios? I'm going to give you the signals in just a minute, but I want to go through this because it's super important. Okay. So the banks loan the government money. So when they need a loan, they don't go to the Fed first. They raise their hand, and that's the banks in this scenario are loaning them money, and they charge them an interest rate. And these are private banks, by the way. Okay. Now, this is the part that doesn't get explained. The Fed creates new dollars. All right. And the Fed buys the government's loans, super important part, from the banks. And this is the magic trick. All right. This is the thing where it's kind of a loop-de-loop. Banks loan money to the government. Then the Fed prints new money, and the Fed buys those loans back from the banks. This is how the system works. So now the government owes the Fed and doesn't owe the banks. The government doesn't owe the banks anymore. And the banks, for holding the loan that they gave to the government, they get their money back plus a profit. So it's kind of like US government goes, Dad, I need a loan. Private banks come in, they give the loan, they charge an interest rate. The Fed goes to the money printer months later, prints fresh dollars, injects that money, buys those loans back from the bank. The bank keeps their spread, makes money on it. The bank goes and distributes that money in the form of loans to the economy. And now the US government is in debt to the Fed. I mean, if you just want to call it what it is, the Fed should just print money and give it to the government. But people would go, that's crazy. Well, that's basically what happens indirectly. Okay. So what happens next? This is the money chain. And I'm sharing this with you because this is the idea of how the system works. And this is why I'm continuing to trade BMNR. I'm continuing to hold BMNR. I'm continuing to hold my Bitcoin, continue to hold my MSTR, because in the long run, let's say we go more bearish and we drop more. Over the long run, Bitcoin's going to go up, MSTR is going to go up, BMNR is going to go up. And I don't want to be subject to an economy where this money printer is destroying wealth. So watch what happens next, okay? So what happens next on the money chain? Here's the order of who gets the new money. So the banks eat first. They're the ones who eat first, the banks, because the Fed prints money to give the banks. The banks loaned money to the government. The Fed prints money and says, we'll buy back the loans from you, bankers. No problem. We'll buy back the loans and we'll make the government in debt to us, the US Treasury in debt to us, okay? So the banks now get that freshly printed money because the Fed bought off the loans, printed fresh dollars. Wall Street eats second because the banks who have the fresh money, they then loan money to Wall Street. Wall Street takes the money, they invest, they win. The government eats third. They spend the borrowed money before inflation hits. So the government spends borrowed money, new money at old prices, they benefit early. So they're getting the freshly printed money, the government, and they start spending in the economy. And they go buy stuff. They spend it on war. They spend it on Social Security. They spend it on whatever they're going to spend it on. And so the public, us, we eat last. We're fourth on the food chain. So by the time the money hits the regular people, the prices are higher. Why? Because you print a whole bunch of money into the economy. You have a lot of money chasing too few goods, and prices go up. The dollars buy less because anytime you print more money and put into the economy, it dilutes the dollar, debases the dollar. Groceries go up, your rents go up, your savings are worth less. You get the inflated dollars, not the fresh ones. Banks get the fresh ones. They make loans. They feed off you. Banks make loans to investment companies. They get they're second in line, and the government spends the freshly printed money. So at the bottom of the food chain is us, and we pay for it twice. So when the money printer hits, we pay for it twice. That's why people who are not invested in assets, they get whacked, right? A large percentage of the money in the stock market is controlled by a small percentage of the population. So when money gets printed, people who don't get assets get killed. They get wiped out. That's why the poor get poorer and poorer and poorer, because they don't own homes, they don't own assets. So when money printing goes in, there's lots of money circulating to the economy. People then, when the money gets printed, more loans get made, more houses get purchased, more cars get purchased. More money goes into risk on assets like stocks and investments, and people who hold the stocks and investments, their portfolio goes up. People who don't hold them, they get eaten alive, and the poor get poorer. And this is basically the gist of what happens, right? So that's kind of how it goes, right? So you pay with taxes. Your taxes pay the interest on these loans. Make sense? So a big chunk of your taxes doesn't build anything. It just pays back old debt. We also pay, you and me, with inflation. And that's the secret tax. The Fed prints more dollars, your money's worth less, milk is higher, housing's higher, gas is higher, everything costs more. So this is how we pay, right? Not by choice, automatically. So that's the entire system. Simple, dirty, real, that's how it rolls. Now, why Bitcoin exists, all right? Nobody can print it, nobody can control it, nobody can shut it down, nobody can dilute it. Nobody can fix inflation, quote unquote, by creating more. They're not going to print more of it. There's only 21 million coins. It's digital gold with rules nobody can cheat. Okay. So Bitcoin is kind of the escape path from the system. Now, why Ethereum exists? Ethereum's different. It's the internet of money. Apps run on it. Digital finance runs on it. DeFi, NFTs, smart contracts, all of it. If Bitcoin's digital gold, Ethereum's digital real estate. It's like a digital city. And every time people build apps on it, or quote unquote buildings on top of it, metaphorically, they're building up the digital city of Ethereum. Both are needed. Both grow as the old system cracks. Now, the key to crypto, okay, and the key to us getting a rally for things to go up is crypto doesn't go up just because people like it. Crypto goes up when money flows into the world. when the government spend and when the Fed cuts rates. When banks lend again, that's when stocks rise, assets rise, Bitcoin runs, Ethereum runs. When the world's full of money, Bitcoin pumps. When the world is tight, Bitcoin chills. It's pretty much that simple, right? So when you look at the economy right now, and what's happening is we're seeing clearly, because of the government shutdown, money isn't flowing into the economy. Money's been tightened up. There's like $1 trillion that's been sitting in the Treasury General account, not spending. Fed cut interest rates, but we haven't seen that really filter into the economy enough. Hopefully these checks that Trump's going to issue will come out in the marketplace, and that will pump more money into the economy. But we need liquidity in the economy. And so this is basically what's been happening, which is why one of the reasons why Bitcoin is dropping. So where Bitcoin is right now, it's around 93K. So Bitcoin's not in a bear market yet. There's a probability. Do I think we could rally from here? Yes. Bitcoin's not dead. Bitcoin's not overheated. It's possible that it's simply waiting for money to come back in the system after the government shutdown. And it could act like a coiled spring and just spring back up when liquidity flows back into the system. All right. Michael Saylor gave an interview the other day. Grant Cardone was interviewing him. This was recent, like a day and a half, a couple of days ago. He says, "Where do you think we're at right now?" to Saylor. Saylor remarked, "I think we're going to rally from here." That's his perspective. Saylor also with MSTR, they just bought, as you know, they issued more shares in the marketplace of their preferred stock in Europe, about $750 million or $715 million worth of preferred stock. He just announced a big buy on his green ticker. So probably tomorrow, Saylor will open up with a $750 million or $800 million buy of Bitcoin, which is a larger buy than they've been making over the last several weeks. So Saylor doesn't remain concerned about the market. He thinks we're going to spring back from here. But again, as he shares in his interview, he says, somebody who holds Bitcoin or MSTR needs to have a 4 or 5 year time horizon. And that's his perspective, which is why he's not concerned and he continues to buy more Bitcoin. Make sense? Okay. So here's the 3 possible outcomes, right? So outcome number 1, and I'm giving you data. This is what I've researched and my perspective of here's 3 paths. Choose the one you want, prepare for the one you want. Everybody's got to make their own decisions on it. The best case is we have a big bull run. Money floods back fast. The government spends again. The Fed cuts more. Banks lend aggressively. And Bitcoin rockets to 150K to 180K in 2025, 2026, and Ethereum follows. If that happens, of course, we see a rebound with MSTR. We'd see a rebound with BMNR, et cetera, et cetera. Here could be the most likely case, I think, okay? A slow climb up is what I think is the most likely case. Money comes back slowly. Not a flood, just a steady return. Bitcoin rises between 120K to 180K through 2025 and into 2026. This seems to me to be the most realistic scenario, okay? Worst case, real bear market drop. Always got to look at the worst case. It's not sideways, not choppy, a true bear if money doesn't come back into the system, if the Fed pauses cuts, if government's free spending again, Bitcoin can fall between 70K and 85K. This would be a mild bear. A deeper bear would be 55K to 65K. Probability lower, maybe 25%, somewhere around there. Not impossible, right? But lower, okay? So what's happening, all right? So we could rally back up again. We're waiting for the next wave of money to come in, waiting for liquidity to come back, waiting for the system to loosen. And when that money hits the system again, Bitcoin doesn't move slow, it moves fast. Okay, so are we heading into a Bitcoin bear? Here's the 6 signals that I would look for. I'm going to give you, actually, there's 7 signals I'm going to give you. So let's just take a look at the signals right now, okay? So how many are positive, how many are negative, and what this really means? Let's get into it, okay? Signal number 1, the Fed, main signal. This is the big one. This is the money valve, the money printer. A month ago, the markets were like, there's a 70% chance that we're going to get a rate cut in December. We're confident about it. As of today, the CME Fed Watch puts the odds at 48 to 49% that we're going to get a rate cut. Polymarket puts it basically a 50-50 coin flip. So that's confirmed from the live data from these markets, right? So the market has lost some confidence in a December rate cut. This signal is negative. And hopefully the Fed will get real data back, because what's happening right now is they're flying completely blind. They don't have data. They don't have reports. So they're coming out and giving data to the marketplace like they did last week, which caused a lot of bearish sentiment. And that's when the poly markets dropped from like a 63% cut to a 49 or 50% cut. So the Fed needs to get its data back and needs to stop spewing information without data, which is what it did last week. Okay. So you have that. All right. Next. Oops. I'm going to go back here. Okay. So next, signal number 2, whale behavior. Big money makes big moves. Ultimately, since October, whales have sold over 815,000 Bitcoin. This has actually been going on since July, August, September, October, 815,000 Bitcoin. OG whales are spending coins they've held for years. This is the largest wave of whale selling in 2025. This isn't retail shaking out. This is massive supply hitting the market. This signal's negative. Okay. Signal number 3, Bitcoin structure. Bitcoin all-time high this cycle, about 126,000. Recent low, 94, 93,000. Current zone is 94,000. So that's a 25% correction for Bitcoin. It's not a bear. Okay. Bitcoin bears are more 50% to 80% drops. 2018, 19, 90%. 2020, 21, 80% or so. So this signal is more neutral, not bullish, not bearish, just a normal big correction that we're seeing right now. And then signal number 4, global liquidity. Got to get money in the system. Bitcoin pumps when the world has money, period. Right now, global liquidity is not shrinking. It's growing modestly. We're not in a 2022 style liquidity collapse. This signal equals positive, small positive, but still a positive. Signal number 5, ETF plus institutional flows, the big boys. In early October, we had record inflows into Bitcoin ETFs. Late October, we started having outflows in the ETFs. So assets under management still strong. The institutions haven't left. I would say this is slightly positive, but kind of mixed. And then you have the fear and greed index, which is around 20, I think even lower. But extreme fear usually marks bottoms, not tops. So this signal equals mixed, leaning positive on it. Okay. So here's the head count for today. Like 2 negative, the Fed cut, odds dropping, whales selling mass amounts. Positive 2, global liquidity slightly expanding. ETF institutional flows may stabilize. And then you have kind of a mixed bag here, Bitcoin structure, and we've got a negative 25% drop. We haven't hit a 30, 40, 50% drop at this point. So you can't sit here and look and say this is a bear market right now. And so you got sentiment and fear equals a possible bottom right now, because the index is low. So it could be that we're at a bottom, we're at a possible bottom. We go up from here. All right. So it could be a big correction that we're looking at. And we've seen this at times before where this is a big correction and we could go back up. Also, mind you, with strategy back in 2024, I remember holding the asset when it went up to about $2,000 before the stock split, for its split. And then it dropped all the way down to like almost $1,000. So it was a 50% drawdown in 2024. So we've seen about a 50% drawdown with strategy now, a little bit more than that. So we will see if we have a spring back up from here, per se. And then signal number 7, which is something to look at, which is just overall, just like extremely bullish long-term for what's happening with BMNR, Ethereum, Bitcoin. So overall, the future of Bitcoin and Ethereum and BMNR and MSTR to me is extremely solid. Like for me, it's 100% solid in the long term. And the reason being is because you're looking at massive blockchain adoption. You've got all these companies that I've talked about before in previous videos: JP Morgan, BlackRock, Fidelity, PayPal, Visa, Citi, Goldman. They're all building on the blockchain, and many of them are already there. So the rails of the future are being rebuilt. So I still maintain the fact that there's no question for me in the future that Bitcoin and MSTR and BMNR and ETH are winners. And that this is just the most important financial system ever in the history of the world, that is being developed right underneath our noses. It's one of the most important forces in all of crypto. Most people have no idea how big it is, but what's actually happening is this. You got huge financial institutions moving on. So you got JP Morgan is running Onyx. It's a private Ethereum network. And it's settling billions of dollars in real transactions. So this was like the bear on Bitcoin. The one was like, Bitcoin's a scam. And they're now using tokenized deposits and blockchain settlement. So that's huge, right? Why? They want things to settle faster. They want things to settle cheaper. They don't want to use the snail mail technology they have with current financial institutions. So they're moving on the chain for faster, more efficient, and they're going to make a lot more money, and they're going to be able to transfer money faster. You got BlackRock. They launched BUIDL. It's a tokenized money market fund on Ethereum, tokenizing trillions of dollars in the future. Okay. And then you've got PayPal. They built their own stablecoin directly on Ethereum. So they want their settlement faster for millions and millions of users. So there continues to be good news coming out on this. You got Visa and MasterCard. They're testing USDC settlement on Ethereum and layer 2s. And then you've got Citi, Goldman, Franklin Templeton tokenizing treasuries, funds, and securities. So they're building trading and settlement rails. And that's just the bottom line. If you were to sum up what I'm saying here, we got a new financial system that's being built. You look at this infrastructure being built for the long term. Once the banks get on and the financial institutions, they're not going to get off of it. They're not going to spend all this money building on creating new infrastructure just to get off of it. Plus, to me, it's an impossibility that these rails of Ethereum and Solana are not the future, because it's faster, it's more efficient, it's cheaper. I'll say it again, okay? You got the DTCC, basically the backbone of Wall Street. Just like you look at the settlement, all the settlement goes through the DTCC. And so they're going to be running tokenized settlement pilots on Ethereum because all the settlements that are going through with these different exchanges and these different financial institutions, it needs to be faster, it needs to be more efficient, it needs to be cheaper, and it needs to move in a more financially viable way for everybody. Okay, so this is just overall bull signal for crypto. Okay, for Ethereum, BMNR, MSTR. Now, when will that hit? This is obviously longer term infrastructure, but as good news continues to come out, that's really good for confidence in the future of Bitcoin and all the different assets I'm talking about. So you've got baseline demand for crypto rails right now. Even if retail disappears for 6 months, even if the price dips, these institutions keep using the rails. So that raises the floor, right? So if they keep using the rails and they keep building on it, it raises the floor. So maybe if we have Bitcoin drop, it doesn't drop as low as it has in the past. So it keeps raising the floor for, I think, the price action on these different assets. It puts trillions of dollars into the crypto ecosystem. If you look at the majority of stable coins, they're on the Ethereum blockchain. And what we're looking at here is tokenized assets, tokenized money, tokenized funds, stable coins, settlement rails. This is not like crypto casino money. This is Wall Street money going on here. And it makes crypto inevitable. So once the banks build on there, as I just said, they're not going back. Just like nobody went back to flip phones after the iPhone. Okay. So here's the important part. These banks building on Ethereum doesn't change what the Fed does in December on whether money flows in or flows out. Let's just hope and decide that the Fed is actually going to come to their senses and cut in December. Like they really need to cut in December. They need to give some dovish news in December and not some hawkish news. Every time they keep sharing the news or the uncertainty, it's freaking out the markets. And so we need some dovish news that'll be bullish in December. Okay, that's what we're looking for. And so it doesn't change whether money flows in or out, right? So all this infrastructure is great, it's positive, it's bullish for the future, but we need money to flow into the economy. We need money to flow into the economy so it can go into risk on assets. All right. So short-term price is going to be affected by liquidity. Institutional adoption is going to create the structural foundation of the future, and that's what keeps happening. So Signal 7 tells us the long-term direction is up permanently. So just the bullishness of Bitcoin and Ethereum for the future and BMNR and MSTR, it's just phenomenal. Okay. Financial system is quietly rebuilding itself on crypto rails, but it doesn't protect us from short-term corrections like we're seeing right now. All right. Any bear we get from here will be smaller, shorter, and higher than bears we've had in the past, I think, or any bearish sentiment that we've had. So that's the power of Signal 7. and how it kind of rolls. All right. So if you look at if you overview just kind of what we were talking about here, you just got to look at the 7 different signals. We need liquidity flow back in the system. We need the Fed to cut rates in December. We need liquidity to come back from the government shutdown and start pouring into the economy. And we need to see things happen in a different fashion than they've been happening, because it's been all this uncertainty. The Fed announces good news, and then they hit it with bad news. They announce good news, and they hit it with bad news. We need just some positive direction of like, here's where the Fed is going. Here's what's realistically happening in the economy with accurate reports, not inflated reports. And we need some good news. And so December 1st, quantitative tightening is supposed to end, which means there would be money printing and money put back into the economy. And that's what we need. So the government doesn't have choice but to print money. The question is, when will it happen? And that's the thing that we're faced with right now. When will it happen? And I still think that the likely scenario is that we give, you guys get to see my background, my studio here I was meant to do this during the daytime, but I was on a flight to Vancouver, so still wanted to come in and do a show for you. So you get to see my lights in the background, all this. But anyway, we'll continue. So with that, I'm still continuing to hold on to my BMNR, my MSTR, and my Bitcoin. Those are the positions that I hold. Again, everybody needs to make their own decision on what they're doing. I still maintain that we're going to run into 2026, and then we could have just kind of a slow chop. We're going to go down maybe a little bit further, and hopefully my plan is for us to continue to go back up in 2026. Maybe something will happen in 2025 when the Fed cuts interest rates, if they do, because there's a 50-50 chance, as liquidity starts to go back into the system where the government shutdown is over. Now money's going to flow out of the Treasury general account. It's going to flow into the economy. We're going to have more liquidity in the economy, and that's going to be good for risk on assets. As the Fed gets their act in gear, gets data that they can report that's real data, because they're flying blind right now. So overall, my plan is, if we drop lower, I've got dry powder to pick up more BMNR. Either way, I'm going to continue to trade BMNR. That's how I pick up shares at the bottom, and I've been picking them up all the way down. Again, I'm not immune to market drops, but the fact that I trade allows me to actually pick up shares and continue to lessen the blow of a drop. So if BMNR drops 40% and I'm trading, I'm picking up a lot more shares at a lower price point, and I'm lowering my average price. And that's the plan, and that's been the plan all along. So I hope this serves you. Hope you guys keep the faith on this. The sentiment obviously is not good out there, but these assets continue to remain strong in terms of long-term horizons. Go watch some of Saylor's videos recently of what he put out. He really talks about the long-term horizon of holding Bitcoin and holding MSTR. Either way, if we drop down, I'm going to continue to hold. If we go back up, I'm happy. If we drop down, I'm going to continue to trade these assets in terms of picking up more shares. All right. I hope this serves you. We're looking, I wanted to not sugarcoat anything. It's like we have possible scenarios that could shake out. Bitcoin's sitting at 94,201. Could we go into the 80,000 something this week? Could we hit 88,000, 89,000, 87,000? It's possible, right? So let's see what happens. Stay strong with everything. I know it sucks, and the feeling of being in this space right now where we're expecting a bull run, we're expecting a blow off top, and it's not happening. It's just kind of very disenchanting for everyone. And this is just not the bull run that anybody expected. With that, we are in a different market. This is an institutional game now. It's not a retail game. You can see by the amount of retail buying that's going on versus the institutional buying. It's an institutional game. What's going to happen in the future? I don't think anybody can predict the future. I think we can just prepare for both sides of the scenario. And for me, it's trading as the market goes down to pick up shares. It's having some dry powder to pick up more shares as the market drops. And as we go up into the future over the next 4, 5, 10, 20 years, the future of Bitcoin, the future of MSTR, the future of BMNR, the future of Ethereum, I think is extraordinarily bright. So if we drop, I hold. If we go up higher, then I'm super happy, and we all get to celebrate. All right. Hope you have a great rest of the day. If you want to get my book, you can snag it down below. Also, I have a trading video in there for free that shows you how I'm trading and what I'm doing to pick up shares at the bottom of the market. Hope it serves you. I hope things turn around and go well in the upcoming weeks. It could be choppy for us, so be prepared. I'll see you soon.